And welcome to Welcome Home Radio, where real estate lending and learning come together. This is your mortgage market update for July 1st. And first, I want to wish you a happy 4th of July. I hope you have an exciting weekend planned for you and your family to celebrate our nation. Start off our update. Stocks moved 100 points higher this morning after a very strong ADP employment report. And on the news of Pfizer and BioNTech seeing positive results for a vaccine candidate. The ADP employment report showed that there was a gain of 2.37 million jobs in the month of June. It's a bit less than 3 million that they are expected, but there was a 6 million revision of May report. The biggest gains were small businesses with less than 49 employees at almost 1 million job increase. So this is great news. Businesses reopening, people getting back to work. The MBA released their mortgage application data, and it showed overall application volume down 1.8% from the previous week. Purchase applications were down slightly, still 15% higher year over year, which is tremendous. Refis were also down greater, 2.2%, and overall year over year at 74% higher. So we're still seeing a lot of activity in the refinance and purchase markets. With refis up, showing people wanting to stay in place where they're at, we are seeing more people wanting into the market and out of the rent race. A seller's market is definitely forming. And of course, Alan will be able to talk maybe a little bit more about that. But values will go in, values are going to go up in most of the market of 150 to 350,000. Higher markets will maintain a steadier growth. We're going to see a lot of competition in that 150 to 350 market. Today we have Alan Pace with Fathom Realty. Glad to have you here, Alan. Hope you're doing well, brother. And of course, returning from last week, Jeff Duffy with Fidelity Title. Glad to have you back, Jeff. Gentlemen, glad to have you. Happy 4th of July weekend coming up.
Thank you. Happy 4th of July.
And tell us, Alan, we never got a chance to really talk about your transition a little bit. You have moved.
I have, yeah. I've left Keller Williams and went to Fathom Realty. And it's been fun.
That is awesome. We're so glad that you're able to still make changes and move forward. Hey, guys, today we're going to be talking about a lot of different unique things, but all dealing and congregating around title. And Jeff, if you could, help our listeners understand, basically we talk about home insurance, title insurance, car insurance. I mean, help our listeners understand what this stuff does for us so that we can better explain and better have a topic conversation on title insurance for us, please.
The first way I like to always explain when someone says, what is title insurance? The difference between, they were like, well, we have our homeowner's insurance. I have car insurance I've had forever I'm paying on. The biggest difference that I always like to explain it is that your homeowner's insurance and your car insurance, you're paying for the future. If you happen to be in an automobile accident, if a storm comes through and causes damage to your property. So those are things that those coverages are looking for the future. Whereas a title insurance, as far as issued an owner's title policy, is protecting you from the past and anything that could have been filed before you own that property, before you took vested interest in that property. That's the first step. And the way I always just like to explain the difference in what a title insurance policy does.
So help us understand in a story type approach how what from the past can end up biting somebody on title insurance. I mean, it just doesn't make sense to me. I've owned my property. I've been in it for 5 years. What can happen?
There's a whole vast list and array of things, but we'll hit some of the highlights. Then primarily, let's say Farmer Jones, who owned that development before it was built, or someone who owned that land 20, 50, who knows, 100 years ago. Well, for some reason, their heirs come back and say, you know what? My great-grandfather never really sold that ranch. He was bamboozled out of it. He was conned out of that. That was a Ford signature. That's one of the things that could pop up. Let's go back even right now.
Now. Wait, I'm sorry. Let me make sure I understand. So sure. Because of some card game at poker, and he didn't sign the document or the deed of trust over, that a family relative, somebody can come back and say, I own this property. I never gave authority to build on this or so forth. And I can claim a deed of trust or a title to this property. Is that what you're saying?
Not a deed of trust, but they would be able to claim as an heir, they own interest in that property. It was never properly conveyed to the current owner. Forgery is the number one aspect of title insurance claims in the state of Texas, albeit I don't know the stats for every state, but I know for Texas, that's the primary reason for title claims.
Forgery. Now explain that to us. Help us understand that.
Once again, that is someone who has totally just maybe created a deed, signed it, or you had someone sign it who didn't know they had what they were signing. There's a gentleman, and I don't have the story in front of me. Just in the last few years, I may be familiar with, who from a state penitentiary was having deeds and documents filed in a courthouse of record that was allowing him to take possession of these properties. So
while in jail, he just figured out a smooth way to get some things processed, and he was able to do it. Now, what did that cause? That created a lot of attorneys, like court costs, a lot of fees and things. It's inevitably corrected, but it does cost money, and it does cause an issue with the chain of title for a period of time till it's cleared up. And that insurance policy stays with those owners until such time as they pay off the whole property or move out. Is that what you're saying?
But not just move out, but let's go back to, let me back up one step with your title insurance. Unlike your homeowners or car, it is a one-time fee. So once the title policy is issued for you purchasing that property, you own it as long as you have interest in that property. So you are covered the entire time, whether it be 5 years. You can move out. Let's say maybe you let your kids move in that property, you bought another place. As long as you're still in title, that policy does protect you from any possible surprises, as we can say.
Wow. Quite a policy, very powerful for us.
It is.
If we do it right. So now, is the title insurance prices regulated in any way?
Absolutely. The state of Texas, through the Texas Department of Insurance, TLTA, does regulate the cost of a title policy. So no matter where you close, no matter what underwriter issues the policy for you, it is following the guidelines by the state of Texas.
So those guidelines, are they federally or just state by state?
They're state. You can see that state of Texas follows along. There's a majority of states that kind of issues a title policy very, very similar to Texas, but there still are some states where some folks have moved into Texas going, well, we didn't use a title company. They're not closing through title companies. A lot of places on the East Coast, everything is still closed through the attorney's offices. They're the ones issuing a policy and handling the closing. There's not a title company.
So just like when your identity gets stolen, there's companies out there now selling your title insurance coverage. It's a little different, but it's just like, protect my house. If somebody ever does from jail what Jeff was describing, then this company is supposed to stand up and, take care of fees that lawyers might charge to make things correct and cover some damages. So that, unfortunately, with the technology we have today, a lot of things are going on. One, there's so many disclaimers now. Every email that we have has a disclaimer, and that's always as a result of, something bad has happened in the past, and now we all have to protect ourselves. So anyway, I think what I'm going to do is try to get my voice in sync here. Evidently something's going on with the internet. So I'm going to log off and log back on. I'll be right back.
Okay. We'll look forward to you coming back, Alan. Now,
yes, sir. I'll be right back.
Now, I want to remind our audience that you can put your questions and comments there live. We'll try to get to them as soon as possible. Or I'm sure our producer is going to put our phone number up there very quickly. You can call in and ask your questions of either myself, Jeff, or Alan. But moving on about title, how much coverage is needed generally when you do? I mean, I see title policies are different if somebody's refinancing a home and cost-wise as opposed to purchasing. is it based on the value of the loan amount, or is it based on the value of the property? What is that based on?
So there's two thoughts there. One being, of course, there are actually two policies issued with a closing, especially I say two policies because you are borrowing a large sum of money from a bank, from a mortgage company to purchase the property. The owner's policy needs to cover the amount, the value of the property. That's what the owner's coverage goes by. You see, when you said on a refi, there's going to be varying that a refinance, you get a discount because if you just bought the property 3 years ago, you're going to say, hey, I want to close to get a better rate on my loan. Well, you're going to still need a new policy through that refinance, but we have what you call an R8 credit. So as long as you're in the first realm of 5 years.
I'm going to stop you, Jeff. You used an acronym. So you got to help us. RA. Is that Rural Ambassador? Is that rate?
No, that's not an A. That's the number 8.
R8.
8. That's
so
my
R8 mean.
Correct.
Kind of like R2D2.
Oh, okay. Good coverage. Well, he was a good protection, right? For everyone through all the years. So, but that credit does give you a discount because you've had your policy purchased within, typically it's the last 5 years is what the guidelines are. If you're over 5 years, you begin to where you're not really going to be getting a discount or a benefit for it.
I have a question, Jeff, that clients ask me all the time. Does the insurance expire, or do you have it for as long as you own the home?
That's exactly right, Alan. That's as long as you have vested interest in that property, that title policy covers you.
Good.
It is good. It's good for till the end of your time of ownership is the best way to think of it.
Oh, and he even, he stressed about this. He says, even if you have somebody else move in, you're still on title. Let's say your children move in and you buy another home somewhere, or you move to the lake and they own you're still on title. The insurance stays with that again through even their living time. That's amazing to me. I don't think I was fully aware of all of that. I thought it was just based on the length of time of the loan itself, and the lender wanted to make sure they were covered.
And that's why, again, I mentioned this, go back to, there are two policies issued. One is the owner's policy, also known as the OTP, or the lender's title policy. So the reason there's two is one is protecting you as the owner. That's the one we've been speaking of. That's as long as you own it. The lender's policy is not the same amount, but it protects the lender and it helps them in the aspect of default of the loan. It is a protection given to them. So that's why there's twofold, that you can technically in the state of Texas, you do not have to buy a title insurance policy. Blair, Alan, if you wanted to go buy a piece of property and you spent from $50 to $500 to $500,000 to even $1 million, the state of Texas does not require an insurance policy. Now, you wouldn't be very smart to not have some type of protection because you don't know what's happened on that piece of land. But the state of Texas does not require it. But when you're obtaining a loan, going through the process of borrowing money, the lender is the one who's going to say, hey, if we're going to loan you this amount of money, Mr. Buyer, we want you to have that protection. You don't get this loan without that protection being in place.
Title insurance, home insurance, property taxes paid. Want to make sure those are taken care of. So
absolutely.
That is awesome. So the coverage is really based on who we're doing it for and then how long they've been in. I did not know 5 years you're out of your discount rate or R8 factor, and I'm at full cost no matter what. Is that what I understand?
Yes, sir. 5 years is the gauge.
It's a magical number. Now, an interesting question comes up. Who usually pays for title?
Once again, that is something that is negotiable. It can be buyer or seller. Now, that being said, 99% of the time, and I don't know that for a fact. That's my number. Don't write that down on that. But I just 99% of the time, the seller pays for that, and that's typically because it's saying, "Hey, Mr. Buyer, I'm selling you my property, and I'm showing you that it is free and clear of any liens or judgments or encumbrances."
Now, during an extreme seller season like we did in 2017, everything's negotiable, and that was clearly one of the things that was being thrown at sellers by numerous buyers trying to buy their home. So there's a lot of things you can do in a contract that are negotiable, obviously, and that includes every number in the contract. So it's all negotiable. And one of them is title insurance, which not exactly, but roughly 1% of the property. If it's a $300,000 property, you're looking at $2,700 or something like that. So then you can say, well, all right, I really want the home, Mr. Seller. You don't have to pay for this. I'll pay for it. I got this. And a seller will look at that. Okay, I got 2 offers for $300,000, and they're both conventional loan. They're nice, look good, but this person wants to buy the title insurance. Well, there's $3,000 in my pocket. I'm going to go with these guys. So there's a lot of ways to do a real estate contract, and numbers are always negotiable. Everything from option fees to title insurance, money down, all that stuff. It's all in play in a very tough market.
And in that negotiations, you would adjust that you're going to select as the borrower. If I'm going to pay for title, I'm going to select the title company, right?
Well, that's also negotiable. Things have changed, and Jeff can probably address this, but years ago, and I'm talking quite a few years ago, it's a little different. I mean, nowadays you might see a lender under the same roof as a realtor company. They're all kind of under one roof, and they can't make anybody do anything. I mean, it's a free market, and you choose who you want to choose. And certainly any title company will not say, well, you're using so-and-so, you got to use us. It's not how it works. But there are a lot of listing agents that, we all get comfortable with the people we work with. And we know that if our clients go through that office, it's going to be smooth sailing. And if we do happen to hit a snag, we understand that office will fix it, will help us fix it. We'll get through it. They got the personality to deal with all the different personalities involved in the contract. They got the know-how in the office. They got lawyer access instantly, and you can get answers. And so once you go through a couple of tough ones with somebody in battle, then you're like, all right, it's a good team here. Now, I might put somebody down as a title company, and the seller might say, no, I'm paying for title insurance and all that stuff. But I will never unless it's just a blatantly bad title company, of which there are not many, but there are a few. I wouldn't even say blatant, but some are better than others. Let's put it that way. Just like in real estate or in lending, everybody has their favorites. But if something should happen to where I see, I had a couple bad experiences there, and I'm not comfortable. Can we please use a different title company? We might negotiate that. But for the most part, I would never let a buyer lose a house because a seller picked a title company. That's not going to happen. I mean, I've worked with a lot of title companies. I've had 1 or 2 bad experiences in all the years. They're really sharp. They're good. They know what they're doing. They're regulated. They're nice people for the most part. And it's just a pleasure doing business with
he doesn't 99%. Very well, does he, Jeff?
No, he doesn't. Well, no, Alan, you hit the nail on the head. Typically, there's so many pieces of a contract that are being negotiated that whomever is paying for the policy is the one that typically gets to pick where it's going to close or who's going to handle that transaction. Now, in the same sense, I know buyers who have come in and can say, well, you know what? I have a really strong offer, Mr. Seller. You may be paying for the title policy, but I've given you more than you asked, and I want to close here, and here's why. The title policy is actually issued into the buyer's name. It's my title policy. Why don't I get to pick who's going to close that or who's going to underwrite that policy? So again, Alan, you're exactly right, though. When it comes down to negotiations, you're going to do what's best for your client, whether it's you're representing the buyer or the seller. And that's what comes. And that's you. Obviously,
that's everybody's duty here. Be it real estate lending or title, our job is for our client. And if you don't like something, you owe it to them to say it, and make a good decision. So it doesn't happen very often, but it happens.
Another aspect of that is, as we've already discussed, every title company, the title policy is the same amount. You're not negotiating like you can in some other states and say, well, hey, this guy's going to give us a discount if we close it here. That's not the case in the state of Texas. Our fees are roughly the same, a few $100s here or there because of escrow fees. So what it boils down to, that and I'm sure my team and most other title companies consider, is the communication and the flow that we make sure happens during this process. And that's the biggest key as to why you have a comfort level, as you already mentioned. You were exactly right with that.
Well, I would go back to last week's discussion, Jeff, with you in reference to, my goodness, I mean, literally right now, Jeff, while Jeff and I are on the phone and on the internet here having a radio show discussing title, he's closing a loan for me via e-sign at my client's home at their convenience, which is just a tremendous solution. And you have that available for any situation. And I mean, he even closed one with a veteran that was in a combat zone. So again, that flexibility, you said it, Alan, earlier, if you've been through the battle with a few people you really trust, you know what can happen. I know that with Jeff, he's been able to handle situations immensely, and he's doing multiple refis at people's homes, not making them come into an office. So I just strongly recommend anybody that is flexible and able to understand what we're talking about and the necessity to be available and helping the client out. Communicating is critical in this. This is the largest purchase for 98.7% of Americans. So you need to understand all the people that come in. Alan's the front guy. He literally has people right behind him. As the lender, I have over 23 people that support us between all of the support of processing of files, processing a loan, processing a contract, and title is such a key part of that. And as you said, it's long term. It's not short term.
Well, and that's the thing with a lot of people do not always realize, Blair, when they come to you or they come to Alan, they're trusting you to get this transaction or refinance, whatever it may be, handled. They don't realize the people that you put in trust behind the scene while you're up front, face to face with them, making it happen. And so that's why it's such a key for you guys, for sure.
Oh, it is. I mean, you've got to have, as Alan said, you've got to have that trust, and you've got to have that ability and flexibility. I mean, I can't tell you how many times Jeff's not taken my call at 12 midnight on a Saturday, but he does call me back. He does get things done. And it's such a joy. But hey, if I'm going to ask our wonderful producer and head monkey butt, if you please put up that phone number so we can be calling. There it is, 877-337-5844. If you have a question you want to call in, you want to get on the radio and ask your question of either Alan or Jeff, please call us in. Put your comments into the live. We'll try to get to them. Just want to answer your questions because this is critical that you know about title, you understand what it means to you in this transaction. Now, has anybody received Russia phone calls? I don't understand that.
I'm sure they have a great deal for you. A great opportunity.
A great opportunity. Hey, have you ever had a seller, and we were talking about a little bit, we kind of discussed this, but a seller pushing a specific title company? Now, Alan, you're in that business. You work with buyers and sellers. You work both sides. What is the criticalness of willingness to pay for title, which is the majority of what happens in a negotiation contract? That benefit of you having that relationship with title, is that really all they're selling? Because the seller doesn't have that relationship with the title company. I would say that's very rare that they would have any relationship with one. Would you agree?
Yeah, well, that's possible, and yeah, that happens a lot. But a seller agent will have that good working relationship with Jeff and recommend them. And of course, you're hired as a realtor to give good advice and help somebody guide through the buying process, and that's part of it.
Sure. Well, it's just interesting to me, the process, how it goes. And I remember.
Well, the common sense is there. What Jeff said earlier is, listen, I'm selling you my house. I want to make sure that you have clear title. I want to, I owe you that. That's generally how it is. And buyers appreciate that. They understand it, and when they go to sell the house, then it's their turn to do that. But, and like we touched briefly earlier, in a very busy seller's market, that's negotiable. And everything in a real estate contract is negotiable except for the address.
You said something earlier. You just said the buyers understand it and appreciate it. Do you really think the buyers understand title? And
no, I don't think they understand title, but they understand somebody saying it's a good, I thank you for assuring that I have clear title. And you do have that talk. And most people understand that. I wouldn't say they know the definitions, but they do understand when you say, well, look, we don't want anybody coming to your door in 2 years and saying, get out of my house. Okay. Or I own part of this house. If you put it in people layman terms, they get it. And then they are appreciative. But no, do they understand, the little nuances of, title and stuff? No, most people do not.
Blair, you mentioned this to open the show. The average person, I believe still the average person is somewhere in the range of only needs the title company 5 times in their life, 4 to 6, 7 times on an average basis. So you'd be amazed. I've been in this industry for this is my 26th year, and I still have people sometimes I go, well, so what do you do? And I'll say, oh, I'm in title. They go, oh, tile. We were thinking about redoing our floors. No, tile. you just don't hear or need us in that aspect all the
until you need us.
Right.
It's kind of like that security, your identity theft programs that you may or may not want to do, or freezing your accounts or credit scores, or however people want to secure their own data. You don't need it until you need it. And it's amazing when you do, how much importance that is. I find it interesting, like I'm doing a refinance and I always ask, do you have a copy of your survey? Because that was accepted by a title company at that time. That should be still pretty good, right? And we should be able to use that survey and we don't have to spend additional money. And it's amazing. I don't know where that stuff is. I don't have any idea, So I'm just amazing that I've been at closings. I see where they're at. I see what's gone through. But I get the feeling that most buyers or sellers or refinancing folks, I just want to sign and get done. I just want to move on. My life is impacting. I got to move in, or I got to move out, or I'm focused on so many other things that this is just a step that sometimes seems to be an obstacle as opposed to
surveys are a fun thing in the real estate transaction too, because a lot of people will buy a house and keep a copy of the survey in with their closing docs, and they'll file them away and they'll have them easily. I just got a listing in Hickory Creek and they pulled out their docs from when they bought, and there they were, and everything's fine. But there's also, as Jeff knows, something called a T47, and it's a seller has to get that notarized that they didn't make any structural changes to their property. Did they put in a pool? Did they, add a porch? Did they put a barn building back there on a slab, things like that. And so at that point, Jeff and the folks at title, they need something a little different. The old survey won't work.
What do you worry about on surveys? Is it different things? I mean, like burying, Scooter out in the backyard because the dog passed away. I mean, what are you looking for there on that survey, Jeff?
So, well, typically, especially if we're using an existing survey, whether it be a refinance or a purchase, the first things we're going to look at is the surveyor stamp there, is the signature there, is the lot and block information there. Because sometimes a client, a buyer, or someone doing a refinance, borrower will send us a survey and it's cut off in some of those areas.
Okay.
This is, keep in mind, surveyors have to be licensed. Okay. So a lender, a title company, everyone will say, hey, I didn't draw this survey for you. We have to have a licensed surveyor to have created this instrument. So that's why we have to be able to see all that information on the survey.
Okay. Can I stop you real quick? I've got to clarify for our listeners, and I want to make sure I understand, because you said something. Properties can be in 2 sets of circumstances. One, lot and block, or post and what's the other one? What?
Meets and bounds. That's acres.
So help our listeners understand lot and block and meets and bounds, please.
So the difference being when a developer goes in and takes a raw piece of land and creates your neighborhood or your subdivision, they go in and are creating each of those lots. They're not just drawing it and having it on a piece of paper. That's why, let me say, when you see a surveyor come out and those flags they put in the yard, they have located the pins that were put in place. So there's a pin acknowledging and separating the lines that you see from the original creation of that neighborhood. Those pins then, when you come create that lot and block, which becomes the legal description for your piece of pie. Okay, that's a lot and block. Now, that's why that's assigned to that property from now till later, unless you leveled it and completely recreated that piece of land. Okay, that's a lot and block. Meets and bounds comes in with acreage because it is such a large tract, and so at that point, that's where they're going off of. Yes, originally at some point, there's what's called a plat that was created on even a piece of acreage, and it draws that out. But instead of knowing that there's a pin in every location, you can still find meets and bound descriptions that uses the 40-year-old, 70-year-old, 100-year-old old oak tree on the corner, and it says so many degrees from this corner head due west or east, or all the latitude, longitude numbers come into play at that point.
Does it have a yellow ribbon around it?
They may still, you never know, but you can find.
I'm telling you, Blair, I have seen yellow ribbons around them.
Those are still in place when you get out rural. But typically any type of acreage, that's what we call a meets and bounds. It uses the latitude and longitude numbers and description.
And normally these types of things have to be accepted as an old survey, has to be accepted by the title company. It's not the lending situation. It's your firm. Title has to confirm that survey is good. Is that correct?
Everyone in the transaction is really relying on us, the title company, to approve that survey. And the reason why is because we're issuing survey coverage. And that is also then becomes a requirement of a lender. Once again, we always have to break it down to they are investing a large sum of money in your purchase and in you and your ability to pay it. That's that money back. But in the meantime, we want to make sure all these pieces and things are in place to protect their investment in you and that property.
How often does survey, I mean, you remember the old, I'm trying to remember the TV shows that we used to have, and it was the Jeffersons, and their fence line was 1 foot too far one way or something. How often does that sort of thing happen in a lot and block area, that fences are off or driveways overstep their bounds or something? Does that happen very much?
Absolutely. And there's a big difference between driveways and fences. Let's start there.
Okay.
So it's not uncommon that we have a survey, and because whoever put that fence in didn't use that survey, or maybe they didn't know meets and bounds, and it's 12 inches, it's 6 inches, maybe even 2 feet one way or the other. Now, that's not an issue because it can be corrected. It's typically, unless one party says, I want my 2 feet back, no one's going to worry about it until maybe it's time to actually replace the fence. Then you correct it. Now, and there's a whole other issue and here's a perfect example. We closed on a property it was a large lot, but when they built the house, a corner of the actual driveway and garage crossed over that line, that building line and property line. Guess what? We're not issuing title insurance on that, or a lender and the buyer then has to give an exception that says, and a lender's not going to do that. So I'm telling you the truth, it's there. Try not to go too deep down the rabbit hole. But when you have a concrete structure that crosses those boundary lines, we're not going to issue it. We're not going to accept that.
So, Alan, have you been in that situation?
Oh, the fence thing is pretty common, like Jeff said. I mean, let's take a 40-year-old builder subdivision in any city, and let's have now 40 years later, maybe 3 different families in there putting new fences in, and and then whatever. So yeah, fence things are off a lot, but it doesn't really. I mean, I don't see a lot of it being brought up, but I know that some of these are off just a little bit, and I don't know. Jeff, what do you guys do? I mean, it's when you get a good survey, you're really not going to do anything because you got a good survey. So unless somebody really brings it up, has a surveyor go out there and redo it, and then says, I want my, 8 inches back, these people put their fence on my property, then you don't really have a problem with, the lot block type stuff, because it's just really old. And, I've done it. We've all put fences in. You have, and we're not sure, we put them pretty close to where the other holes were.
Absolutely.
but we're not sure. So
Or you lined your post up with one eye closed, maybe, you know?
Yeah, I'm telling you, and it was my good eye too. So, but no, it doesn't really, nobody really in that situation gets all, they don't know really, and they don't care, and they're just living their life. And if it's a couple inches off, nobody really cares. But, the thing Jeff was talking about with the driveway and all that stuff, that's serious as can be, because that's a problem. Well, you got to buy land. I guess you got to buy land. Really, you got to buy that. And
that 0.00076% of one.
You're going to buy more than that.
Hey, Alan, let's talk about, though, on the TREC contracts. I know you have to deal with this all the time. When it talks about survey, and I don't have it in front of me as far as the exact verbiage, but the additional survey coverage, it says it will be amended, it will not be amended on the property, and it also has a box checking who will pay for that. I've gotten my thoughts on it, but how often and how big of a stickler does this become for you with people understanding what that is?
I think that's a difficult one to understand. To me, it's there's also a box up there that says it will not be.
Correct.
Okay, and then it all goes away, and until there's a problem, if there's a problem. I personally have not experienced any issues with that yet. Other people I've talked to said it's not a huge expense. And Jeff, I'll ask you about that. Do you know anything about the expense if it is off a little bit?
And now I'm going to forget the number. Is it 5% of the policy amount? Did I hit that right? Boy, I should know that. It should be tattooed on my hand. But what it is, a percentage of the policy amount. So let's say it's really take an average of $100. Give or take $25, let's say. And what it's actually happening, because a lot of people say, well, what is this? You have your survey, you have survey coverage, but that additional coverage is protection of the very small odds that someone does encroach on your property. What that coverage gives you for that small amount is you now do not have to go to who created that encroachment on your boundary line and try to sue them and handle this on your own. You now are provided the attorneys and the legal help to correct that situation. Once again, how often is that going to happen? Not very, but that is just another layer of protection of owning.
And that's why the real estate contracts have grown over the years from 6 pages to 12. It just takes one instance, one major example of a lawsuit, and then the powers to be, or when they're drawing these things up, put something in there like that. And but I've never experienced anybody having an issue with it, not once.
It is funny how much CYA documentation we do in a transaction of real estate.
Well, you stay in your lane, and I love that we have, Jeff on from Title and the appraiser, a couple of weeks ago, and the lender and the realtor. I stay in my lane. I try to stay in my lane. I'm not a lawyer. I'm not a real estate lawyer. I help surprisingly quite a few lawyers buy houses, although as a lawyer, they don't need to have a realtor, but they don't understand the real estate part of it, a lot of them. So they get one, but I just stay in my lane, and it clearly states on real estate contracts, get a lawyer. If you don't understand anything, get a lawyer. Your realtor is not a lawyer. Get a lawyer. And when you terminate a contract, it clearly states, if you don't understand this, get a lawyer. And so I know a lot of lending documents, those piles have gone from that to that over the years. And whenever you close a title, and there's a good link into Jeff's office. I mean, when you're sitting at a table with a young buyer buying their first home, husband and wife, or whatever, and that pile can be very thick. And where am I? There we are. And the title company people wear the little rubber thing on their fingers, and they're flipping through the pages, and now you got to sign your name that's really your name. I never understand that form whatsoever, but there's all sorts of silly things going on, but it's because there's a problem in the past, and lawyers have dealt with it, and this is what we do now. And it goes back to, CYA is an acronym for it, but they're all there for a reason. And, if you stay in your lane, they are good for you as an individual professional. Fill out the contract. That's what I do. And I tell every client, if you get a lawyer, if you need one, call one. I have one. I have several you can call. You can find your own, but most don't choose to do it. Occasionally they do, and I'm all for it.
You'd be amazed. It's one thing if you're buying a residential property. I mean, any amount, it doesn't matter, right? You're spending
Right.
a large sum of money, but we have, because we're a full service law firm. We do commercial and residential, but the amount of people who are come into purchasing an $8 million multifamily property who try to not obtain a lawyer that they might be spending $2,500 on, and yet they are like not wanting to do that until they either are already knee deep in trouble and need help, or they realize they don't really know what they're doing. But people think,
that's such a good point. That's such a good point. You explain to your clients too, well, why am I paying a title company? They're, there's fees. I mean, they operate a business and they're doing a good service for you. You need them. Well, then why do I need a lawyer? They're lawyers. And of course, one of the things that they all sign is that you're not their lawyer. And you try to tell folks, title company is they're not your real estate lawyer. They're there to make sure this title is clear, clean, safe, and insured, good to go. And they will make that happen. But oh my gosh.
Alan, when you think about it, when people ask all the time, the best way to think of it is a title company does not represent buyer or seller or any individual in that transaction. We represent the contract, the agreement between those two parties.
Yeah.
That is our responsibility. That is our goal.
Well put.
Now, we went into lot and block. The other area where we're talking about large properties and purchasing, you're able to purchase, real estate acreage plus also agricultural acreage on the same contract. For example, total of 15 acres, 1 acre is residential where the home is built and the other 14 is ag surveyed. Talk to us about these types of things that have to happen for these types of solutions to go, because more and more people are wanting outside of lot and block and more into my own space. They're social distancing, or however they want to call it, to raise their kids. Help us understand that difference, please.
So we either want a tiny space or our own space, right?
Yeah. I don't think anybody in Texas wants a tiny space, but okay.
So keep in mind the aspect of the ag, that is an exemption through the appraisal district and regarding taxes. So that really isn't a part of the survey that's issued or the owner's policy that's issued. That is not part of what the title policy and exception, those items have to do with. That has to do with the county appraiser's office and the taxes as they are filed on that property or the amount of taxes paid on that property. And you're correct in that a lot of people say, hey, I'm buying Alan's 25 acres here. He has an ag exemption. I want to keep that. Well, that is not something we're going to be able to reassure them. But what I do assist with is we have to call the appraisal's office and say, because some of the counties have been changing the guidelines and regulations of maintaining an ag exemption. For example, they changed it up years ago. If you had X number of pecan trees on an acre, you're a pecan orchard and you got an ag exemption on that. Well, and that's just they've changed the ruling on that now in a lot of counties. And that's just one example, because there's always people looking to find ways to skirt the system, get their discount, save their money, and kind of dance on the line there, as the old saying goes. So it's not, just to reiterate, it's not something that passes through the title company. It's through the county appraisal district. And again, we can just help put you in contact with them on what those requirements are.
Yeah, and they'll just say something like, you know what, I got a bull and a goat on there. That's an ag.
Well, most of them are is they're producing farm. Like you can have horses. You don't get an ag exemption for horses because it's not considered a working animal as far as production on a farm.
A horse is not
you're going to check the county appraiser per county on that, but a lot of places horses do not allow an ag exemption.
Wow. Well, I I don't want to beget anybody the ability to save money on their property tax, especially in a state that's their main revenue source. So again, you come to Texas, we don't have a state sales tax, but we do have property tax, and that's, as you said, through the CAD, County Appraisal District. And if you can get an ag exemption in certain counties, whether it's pecan or goat herding or chicken raising or whatever, I think it's possible. I just find it very interesting that certain counties are definitely, like you're saying, changing their loophole strategy to close up some things, and in some sense they open up more opportunity in other areas. But
that's true.
Yeah, you can't be a casual farmer, rancher, herder anymore. It's generally you got to be a producing farm to get that ag exemption done. So,
And with all this stuff going on now, what a tough job it must be to get a value of a property. I mean, is this, in March, we all thought, nobody's going to buy a house ever again. Then April hit and it just exploded. And, does that mean everything's worth more? Well, 50% unemployment. You can't buy a house if you're on unemployment. Blair can't lend you the money. And so
I'm staying in my money.
How come if 50% of the people are employed, how can values be going up? And, it's really different now. And I think with what's going on with all the different situations in the United States, it's really tough. Whereas a few years back, you could say, well, we're in a seller's market in 2017, and it looks like it's going to continue for a while. Now, with everything, nobody really knows, it's like, what's going on? They're closing businesses again. And, and now we're back to 50% in restaurants. And, and people are losing their jobs. They just got them back open. Now they're losing them again. And it's just, to me, it's created opportunity. The reason I'm bringing it up, because you said things are changing with zoning and ag exemptions and things like that. And everything's always being, I think, critiqued a little bit and fine-tuned. And it's going to be real interesting in a couple of years when we look back and see what got fine-tuned. Because I think there's changes is kind of coming. And
the one thing that's constant is change. And that's why shows like this help people to educate, be informed on a decision. And if you're not asking questions, then I would be concerned. If you're asking questions, find out, get your answers, make sure you understand. Don't just jump at the first thing that happens, because generally that's when you're going to get hurt. And if you're not asking those questions of professionals like Jeff, like Alan.
There's a real excitement out there right now for home purchasing. It is just exciting. It's like they took a couple months off because they didn't know what was going to happen. And then they all came back all at once and said, hey, we're ready to go. We've actually saved more money, or whatever,
Right.
Yeah. And so I think builders are caught off guard. I've been visiting some new construction, and they might have one coming up in September, October. But it's really busy. Inventory is surprisingly low. And that can bode well for everybody. I mean, there are, seller advantages right now, but it's not so much that it's unfair to a buyer either.
Well, you brought up, things are changing. The interesting part about my job is people that I pre-approved back in January, February, March, they still have a job. They've still been working, but they're able to now buy a little bit more home because rates are so good, or the program's changing. They don't qualify anymore. So therefore they're not qualified to buy a home. I mean, you need to stay on top of what we're doing and how, and ask those questions, be communicating. Because I got to tell you, credit scores are changing. They're always moving, and rates are definitely good for refis or purchases. But make sure you're fully qualified. Make sure you know what you want to get done on your process.
I got a quick question for you, Blair. How is the buyer assistant programs coming? I know they took a little bit of a hit there for a while. Are you still being hit, or is it coming back?
No, they're coming back. In fact, we do have TSHAC now available as a down payment assistance program.
Excellent.
One side is totally forgiven, The other side is you must stay in that home for a certain period of time, but they are available. It's just that their credit scores are so high that to help the people that they really need to be helping, they don't work all the time. I'm going to say right now.
So 620 doesn't get you one anymore.
No, sir. And normally, if you're in that situation, you're in a conventional world, being able to do. I mean, credit scores are 660 right now, requirement. So,
okay.
And we're able to do down to 620 on FHA if you have the down payment. So, a gift program from a family member is much more helpful than depending on down payment assistance, because they're really pulling back. They haven't let go like they used to. I'm trying to think of some of the other programs that we used to have that haven't opened up yet. And hard money lenders, non-QM solutions aren't even here. They're not even on the table. So they have really locked down everything on that front. So if you've got a buyer on your hat, you've got a very golden nugget on your hands. Treasure it well. And I know you do, Alan, and I know Jeff does. But well, guys,
Jeff, real quick, a quick question for Jeff before we go. What percentage of transactions in this COVID period, let's say, January through now, let's just do this first half of the year, are cash? Residential, not commercial, residential.
Percentage wise, well, that's tough to put a number to. I mean, it's got to be at 12, 15 almost, somewhere in that range. Probably not as much as maybe you were thinking. It may, but you got to keep in mind, I don't have the stats to say that's something ran within all title, the title industry. That's just ours. Well,
for me, it's been less. It's been less for me personally.
Well, one of the things Blair brought up, the e-signing capabilities earlier, we're closing a lot of cash buyers from other countries. The U.S. is a wonderful place for folks from other countries to buy property and help them on their tax benefits, and they're doing it. Now, here in the States, though, we still have a numerous investor groups that they're there for some good opportunities. So, and they're buying cash as well. So I'm going to say in the aspect of 12 for us right now.
Okay. Good to know.
That's awesome. Well, guys, I really appreciate you. Happy 4th of July. I hope you barbecuing, Jeff?
Absolutely. Always.
Well, hey, real quick, share with our listeners, you've got a golf tournament coming up in October.
Yes, sir. October 1, it is our 3rd annual PLG kids golf tournament. So if everybody remembers, Kid Craddock from years ago created this organization helping those children going through some great health challenges. And this year's on hold, but we're still going to be building for next year as far as the trip. It sends at least, I forget how many families they fed on a jumbo jet down to Disney World for a full week of fun. Everything paid for. And you got to keep in mind when you think, oh, you're going to send that family of 3 or 4. A lot of these children are in positions where they need medical assistance traveling with them as well. So you're sending a whole team. So this being our 3rd year, we're open to those who might want to come play. If you want to be a sponsor, you can reach out the number I'll leave to you in a moment. But it's a great event. Last year we were very excited. We donated $70,000 to Kids and sent several. I think it was at least half a dozen families on that trip. So it's a wonderful cause. But it's going to be a great tournament, lots of great prizes. So we'd love to have you come join us.
Yep, love to see you.
I'm sorry, and so I'm Fidelity National Title. We're part of the Patel Law Group. We're a full-service law firm. Our number is 972-650-6848. If we can be of any help to you.
So grateful for you today. Thanks for coming in to help us understand this further. Alan, great seeing you, brother. I hope you have great plans and enjoy.
Thank you. Yes, sir, we do.
Happy 4th of July. I'm Blair Thomas. God bless everyone. We'll see you next week. Take care.
See you all later.